can go from there. This is going to be a little bit different of a monthly update. We're not going to have a report, but we are going to talk about kind of what's going on and everything. So we'll be able to kind of run through some stuff. If you guys have questions, feel free to drop them in the chat as we go. I'll circle back and answer them as best I can. And then we'll kind of prognosticate about the future, talk about what we're working on and what the challenges are, what the reality of the situation is, and then move forward. So let's get the show on the road, shall we? So let's talk about the market real quick, kind of what's going on, what we're looking at, what we're seeing. So things are feeling a bit toppish. Wouldn't some of you agree? Like the market sentiment is incredibly low. And however, I just saw a tweet earlier today that was talking about how there's this massive disconnect between retail sentiment and institutional sentiment. When it comes to Bitcoin, you have a situation where you kind of have this rounded top, which is usually a bad sign when it comes to the market overall. Not necessarily indicating of a top. However, what we usually look at when we're looking at long range markets are divergences, right? Bullish divergences, bearish divergences. And what that means is the RSI, which is on the screen on the lower half, lower third here, versus the price. Now, a traditional divergence is the RSI, the relative strength index, going down while the price is going up. That would be what you would consider a traditional bearish divergence. And what that means is the price is increasing, but the perceived strength, the RSI of the market, is decreasing. Here you have a clear trend line downward for Bitcoin's RSI. This is on the daily chart spanning about 3 months. At the same time, you don't have an increasing price as much as you have a double top for Bitcoin. This is still considered a notable pattern between the price and the RSI for Bitcoin. We're in a position where we're probably going to see a few months of chop if we don't see Bitcoin start a new leg soon. And so that means that we have certain price targets to look at for Bitcoin. If Bitcoin loses 90,000, 89,000, there's a good chance that we're going to go retest the 200-day moving average. And then there's another price level down here at 73 that we could also retest. So that's not necessarily a bad thing. At the end of the day, Bitcoin can go all the way down to 73, 70,000 and still be in a bullish uptrend. But at that point, we're looking really far ahead. Like if that happens, Bitcoin fails here and it comes down and it oscillates down to the mid 70s, 73, then we would be on another, it would take another few months to get back to the previous all-time high and then a new high above that. Not necessarily saying that it won't happen, but if Bitcoin does decide to take the first half of this year off, which it's increasingly feeling like it might, because right now we're in a situation where bad news negatively impacts the market and good news has no impact on the market. And usually that is a sentiment driven price action, and sentiment is almost always a net negative. However, we also need to look at like the longer view when it comes to the market. And so like if you go to the Bitcoin's weekly chart, this is where the divergence really kind of shows itself. This is where you start to get a little more concerned about the health of the market, because the weekly chart for Bitcoin does show a very clear bullish divergence or bearish divergence. This is something that when you look at it from like a technical analysis standpoint, you can see like, okay, There's definitely a distinct pattern here, and it's something worth keeping an eye on. However, I said this in last month's update. There's a chance that what happens is we take a couple months off into the summer, and then we come up, we hit about 140, 150,000 going into November of next year, and then that's when the cycle ends. And because then what would happen is the RSI would do this, and then it would top out and then go down. And that would complete this like full whoop, that would complete this full what we consider a true bearish divergence. That would complete um, that imagery and that pattern on the charts. So this is kind of what most people are expecting. However, and I said this in the last update, it's worth keeping in mind that this cycle has not been the same. This cycle has not acted the way previous cycles have. A lot of the old heads, including myself, and a lot of people that I know and I talk to on a regular basis, we all feel like we misread this market continuously for at least the last 18 months. Everything that we thought was going to happen, everything that had happened previously, even like our overall generic consensus about price action and market sectors, um, they've all been violated this cycle. So we're slowly getting to the point now where nothing is guaranteed. Nothing is expected to play out exactly how we thought it might. And so there is a chance that this is the market top. There is a chance that we're in a position now where memes and pump fun and these flash in the pan narratives have sucked so much liquidity out of the retail wallets that there is little to no liquidity left from retail to have a large impact on the overall market. And that's different from all the previous cycles, especially last cycle when we had significant sums of money being printed by central banks because of the pandemic. And so last cycle, you had all of your utility altcoins have significant runs of multiple hundreds of percent price growth. You had Ponzi season. You had all the other like really interesting and dynamic market circumstances play out separate from Bitcoin because retail had liquidity available to them to participate. This cycle does not feel that way. This cycle feels like retail just prematurely blew their whole wallets on pump fun and meme coins and other stuff like that. And now we're in a position where Bitcoin's at $98,000 and retail is depressed. And the reason retail is depressed is they're either out of liquidity or they're holding altcoins that were largely ignored for the last year and a half. People aren't here for the technology. People aren't here for the utility. People are here to gamble, and the institutions are here to buy Bitcoin. Now, lately, you've seen institutions start loading up on Ethereum and a couple very select altcoins. And I think that's what the future of this space is going to look like. You're going to have Bitcoin, Ethereum, Solana, XRP, even Doge, apparently, like because Grayscale has the Doge Trust and some ETFs that have been filed. Like you're going to have 10 to 20 blue chip cryptocurrencies outside of Bitcoin that are going to be adopted and probably commandeered by institutions to fulfill whatever end goal that they have when it comes to integrating blockchain and cryptocurrency into their processes, because that's what's going to happen. The powers that be, the ones that have all the wealth, all the money, all the control, they want to continue to control. And so they're going to take blockchain and crypto, they're going to commandeer it for their own goals and purposes. And through that, they'll start to slowly shut out retail and only control access via their offerings in their instruments. Now, there's always going to be a sector of crypto that is retail based that looks a lot like what we just went through with meme season. A lot of speculation, a lot of gambling, and then ultimately it's just going to be mostly PvP, people trading pennies back and forth, while institutions are basically integrating blockchain and large scale blue chip crypto into their already established offerings for their clientele. And so that's kind of why we have this massive disconnect between retail and institutions right now, is because there's a massive disconnect between Bitcoin and literally every other cryptocurrency. And you can see that more specifically. I found this image on Twitter a few days ago, and it was talking about, it listed out all the different tokens and narratives, memes, layer twos, DeFi, AI agents, modular blockchains, gaming and NFTs, even layer ones. These are from their from their all-time high to their price just a few days ago. All of them are somewhere between negative 50% to negative 98%. And you'd think, yeah, okay, well, there's hundreds of thousands of tokens now. No, these are your main altcoins. And the problem is during the bear market, in every cycle before, we had the same game plan. Load up on bags and bags and bags of these altcoins. Load up on them. Because at some point in the next cycle, there's going to be an alt season. Because it's happened every other cycle. It's not happening this cycle. I'm not saying it won't happen this year at some point. We could still see that change. But thus far in this cycle, we haven't seen this play out the way we expected it to. So much of retail, because of our bear market like processes, most of them are deployed into altcoins, anticipating an alt season after Bitcoin and Ethereum break out. Well, that hasn't happened, right? Like, we haven't seen that happen. For example, we can go look at the biggest disappointment, which everybody was wrong about Ethereum. I was wrong about Ethereum. Barry was wrong about Ethereum. All of my old school friends and connections within the industry were wrong about Ethereum. Ethereum might be the single greatest disappointment of this cycle thus far, and we don't know why and what to do about it other than the fact that Vitalik got a girlfriend. I don't know if that's true, but that's like the narrative. And so what this is, and I was telling you guys, I think probably a year ago, that I was tracking this triangle on Ethereum and Bitcoin. And this was the triangle that we were banking on having a breakout. We were banking on this breaking out and up. And unfortunately, what happened with this triangle is it broke to the downside. And right now, it's trading the lowest it's traded since December of 2020. We're late enough into this cycle that we don't know if that's going to change. Now, it could. We could easily see Ethereum do the similar to what we see here. So, like, let's say, for example, Ethereum did do this and then up. That'd be great. That would be a value change of 200% against Bitcoin. If Bitcoin were to level off now, that'd put Ethereum at about $7,500. So it's just something to keep in mind as we move forward. The sheer disorientation of the market, we're all disoriented. Everything we thought we knew as long-term market participants has been violated this year. This is the first cycle where we hit an all-time high before halving. It never happened before. This is the first cycle where we're hitting all-time high and sentiment is in the absolute shitter. This is the first cycle where we've seen Ethereum behave like this against Bitcoin despite it being still the number one smart contract ecosystem within crypto. And this is also the first time where we've seen altcoins continue to be depressed in a cycle like this. We just haven't seen it before. And I speak in generalities because these are the conversations I've had with other people who have been around 7, 10, 12 years in this market. They're seeing stuff they've never seen before. I'm thinking institutions are the ones doing it. I'm also talking about the exchanges. On Sunday, we had the single largest liquidation event in industry history. The reported number was 2.1 billion. That was wrong. So this is Ben from Bybit. The reported amount of liquidations was 2 billion. Ben from Bybit is saying actually it's probably closer to 8 to 10 billion. 5 times bigger than our largest liquidation event ever before. 5 times. Mainly Ethereum. And so if we look at Ethereum's chart just for Sunday, negative 31%. Ethereum went down 31% on Sunday alone. Bitcoin only went down, I think, 9%. And you have to ask yourself, like, what's the big disconnect? Well, the big disconnect is the fact that exchanges and market makers did this to the market. This is becoming a bigger and bigger issue within crypto is coordination and manipulation of markets. And so what it is Binance, Coinbase, Bybit, a lot of these big exchanges, they can't buy and sell assets on their own platform. That's illegal. However, they can send assets to market makers. Specifically, the biggest one is called Wintermute. They send assets to Wintermute. Wintermute takes those assets and does what they tell them to do on the market, on the exchange themselves. So Binance will send $10 million of Bitcoin to Wintermute. Wintermute will take that $10 of Bitcoin and go sell it on the market, and the price will go down. For Ethereum, on Sunday, all of the exchanges sent hundreds of millions of dollars of Ethereum to market makers in a coordinated fashion, which resulted in a cascading liquidation event all the way down to under $2,200. And then they sent the market makers stablecoins to buy back the market. And it's this process over and over again. And this manipulation from market makers and exchanges is part of the institutional issue with the industry now, which is why I think sentiment continues to be so low. And so this is something to keep in mind moving forward is you have major manipulation and suppression of the price because exchanges aren't just providing people an opportunity to trade. They are actively hunting liquidity. And we're talking about sentiment. Here's the fear and greed index for the current market. We're at 35. Designated fear, and Bitcoin's at 98,000. That should not exist. Like that should not be something that exists. But we're in a position now where institutions, including exchanges and market makers, have commandeered the market to solely focus on Bitcoin at the moment, leaving everybody else feeling like there's really no market to participate in at the moment. The other thing that might keep Bitcoin's price lower is a concept of synthetic Bitcoin, aka Bitcoin that exists outside of the supply, the $21 million supply. So let's say, for example, you have all these big wealth managers, Fidelity, BlackRock, Robinhood. They can sell paper Bitcoin to their clients. It doesn't need to be backed by Bitcoin. So it's kind of like trading futures. And so you're just signing a contract for Bitcoin at a certain price. And at some point in the future, the client will redeem that contract for Bitcoin at its current market value. That contract was never backed by Bitcoin. Therefore, there is an infinite amount of supply available of Bitcoin be bought and sold on paper, kind of like they do with precious metals a lot of times. And that means Bitcoin's supply is less important, which I think will ultimately suppress the price. Now, the point of all of this, us, what are we doing? So on Sunday, we took a pretty big hit on our client portfolio when it came to the trading. We have about 30,000 left, which is a little less than half of what we started with. Our goal is to earn it back, and I think we can. And so here is the quickest, cleanest way to explain it. The month of February is almost always green. Of the 14 years that crypto has been around, February has been green 12 of those 14 years. So we are anticipating a bullish February. We had set up some swing positions on the trading account. One of them was Bitcoin, one of them was Ethereum, one of them was Doge, one of them was Sonic. So we had 4 positions. Ethereum and Bitcoin, obvious choices, because if Bitcoin's going to be green, Ethereum, you would anticipate to be net green. Doge was on the list because Doge has been obviously in the news thanks to the government. It had a positive reaction to the Doge website going live for the government. It's also got the Grayscale Trust. It's got ETF applications. There's a handful of bullish reasons to have Doge temporarily in a swing position. And the last one was Sonic. And the reason is Fiery Dev, obviously big fan of Sonic. But also Sonic's TVL as a network had been growing exponentially. The anticipation is Sonic would grow with it. Now, I left for holiday. All those positions were modest in size, modest in leverage, didn't feel overly risky. Then news breaks, the trade war is going to start with Mexico and Canada. Trump is being Trump. However you feel about them, it's not my opinion, but spooks the market. However, having a discussion with some people, we weren't too worried about the market being too overly reactive because this is kind of an old playbook for Trump. Trump says something incendiary, makes a decision, then he comes back to the table, negotiates, and whatever he promised to do ultimately ends up getting delayed or reduced, whatever it might be. However, what we weren't anticipating was the exchanges and the market makers taking that opportunity to fucking destroy traders over the weekend. We didn't anticipate that. Sometimes I use isolated margin, sometimes I use cross margin. Isolated margin means the margin that's in the position that you're trading is the only margin available to that position. So, for example, if you put $100 on a Bitcoin long at 5x leverage, if the price goes down 20%, that position gets liquidated, and you lose $100. Okay, you lost $100. However, if you use cross margin, the margin in your entire account is available to that one position. So technically the position can go negative more than 100% because you have more margin in the account outside of the position that you have open. Well, the problem with that is cross margin is great if you want to leave positions to breathe, like swing positions. Isolated margin is great for risk management, but it restricts the ability to have any flexibility in your entries and exits, your DCAs, because restrict yourself to a specific amount of margin. Both of them have pros and cons depending on which traders you talk to. Some use one religiously, some use the other religiously. It's not necessarily a right or wrong answer unless you have the largest liquidation event in industry history happen to you in that moment. And that's kind of what happened to us. So we didn't lose everything, lost a little more than half. Luckily, we were able to take some corrective action and reduce the pain. However, we have some ground we have to make up now. And so that's the explanation of what happened on Sunday. It was very stressful. I have taken a few days to decompress and kind of like let the situation breathe, because that ultimately is our responsibility. It is cryptocurrency, it is DeFi, it is kind of the Wild West. At any moment, we could lose everything. That's just kind of what we open ourselves up to in this space, and we do our best to avoid that. So with our situation right now, we just have to earn it back. I can tell you, outside of Sunday, our trading has been incredibly successful. For example, January, 80 trades in January, 69 wins. That's an 86% win rate. We had great profits. We made 23% profit on the bankroll in January. We were one bad trade, thanks to Ethereum specifically. The rest of them weren't so bad. But we were one bad trade away from not even needing to have this conversation. Does it mean we're done? No. We are so far from done. We just need to double down on our efforts when it comes to trading, which is 100% my plan. I have put Barry in charge of going out and recruiting clients more now than ever, because it's going to scale. The hits we took this week, just starting out, is a blessing in disguise, because now it gives us a chance to refocus, become even more diligent and disciplined with our risk parameters and our strategies, and to do it without a full client bankroll in hand. So our goal is and has always been to grow this into 300,000, 500,000 portfolio that we can trade with. I would much rather have this happen now and not have it happen when we were holding 550,000. So our hope and our goal is that in the next 3 to 6 months, this is a cautionary tale that is a bump on the road. It's not great. I'm not going to try and sugarcoat it. Kind of leaves us in a tough spot from doing buybacks and rewards on a frequent basis like we have been. It doesn't mean that's going to stop. We're going to keep doing it. It puts us behind the 8 ball a little bit further than we would have liked. The market sentiment doesn't help. However, like I said, January is an incredibly successful month for trading. 86% win rate. Good luck finding that in almost any other trading situation. Sunday was a historic, once in a generation liquidation event that unfortunately we were party to, and we now have to fix. But we have clients coming in. Today we had $30,000 in client funds deposited. Later this week, we're supposed to have another 15 or 20,000 deposited. I have a phone call I have to return today because now that the US is more open, regulatory scrutiny and enforcement is being reconsidered. We are now in discussions of opening up certain aspects of the company to US clients, or at least opening us up to US services to on-ramp and off-ramp at lower prices. So we are in the process putting some pieces back together, but also expanding our opportunities elsewhere. So yes, it's not ideal. I said that in the guild chat. It was painful. We lost a good clip of money, but we are here working and we're going to earn it back. I started putting the idea for this project together back in September of 2022. We started development in February 2023, 2 years ago. I put over $100,000 in my own money into building it. And in 2 years, I have yet to take a salary or recover any of my costs. So you can imagine anybody is motivated to get this back heading in the right direction and overall successful. It's me. I'm the one who is by far the most motivated to get to where we need to be. Now, for investors, from day one, we've always said, don't put more than 5-10% of your portfolio into the project. We put dynamic strategies together for you guys to take healthy profit this whole time, and I hope everybody has done that. So we put systems in place and narratives in place from the very beginning to make sure people are the least affected by the business's operation over the long term. And I hope people have done that and continue to do that. But at the same time, I'm the one positioned to lose the most if things don't go well. And hopefully, as we continue to build out things and we continue to recruit clients and we can continue to cast a wider net down the road, long term, I'm the one who gets to also benefit a lot from it. But that's where we are right now. This weekend sucked. This week has been a great lesson in a little bit of humility, a little bit of perseverance, a little bit of resilience, and also kind of pulling yourself back up. However, we have a very clear roadmap ahead of us when it comes to clients and capital, and ultimately trying to keep in perspective what happened Sunday was once in 15-year event. It doesn't discredit the fact that almost 90% of our trades were successful since January 1st. That can't be discounted. We are bullish on the fact that almost 90% of our trades were green, were profitable. So we can't let one bad trade negate the other 90% that were good, that were profitable. And so that's how we're moving forward. Our clients are aware what's going on with the market. Our team is aware of what our objectives are over the next 3 to 6 months. This is our clearest and cleanest path towards profitability, towards rebuilding the DeFi fund, towards making sure we start heading in the right direction from a token value standpoint, from a product value standpoint. But it's not going to be easy in the short term. Things are going to be hard for a little while. And that sucks. And it sucks mostly for me, but I understand that everybody's in a different situation and things might mean a bit more for them than for the project or the teammates. But we have a clear line of succession when it comes to what we're going to be doing over the next 3 to 6 months, primarily focused on clients. So we're still trying to get these bigger clients in the door and landed that are doing transactional activity. But at the same time, Like I've challenged Barry and the team in Panama to go find us capital to trade because whatever we lost on Sunday, if we can bring 10 times that amount in to offset and then end up in a net positive within a couple months, then this is a non-issue and we move forward in success. But that's the situation at the moment. But things are going to be, I don't want to say different, but they're going to be a little weird for the next few months. We are in flux at the moment. We have some adjustments we need to make. I'm primarily focused on trading. Obviously, Sunday was an abnormality. What do contracts usually say? An active God clause. This Sunday would have definitely probably qualified for the active God clause in contracts. But we're not dead. We're not going anywhere. Team's not disappearing. There's nothing changing about our day-to-day operations. Yeah, thank you, Phip. We took a shot on the chin. Whoa, buddy, did we take a shot on the chin? I had a hard I had a hard night Sunday night. My wife could surely share the details. I haven't felt that bad in several years, but it took me about a day to put it into context, reframe it, talked through the whole process with Michael and Barry and just trying to keep it in perspective. You know, like Sunday was one bad day. It was one really bad day, but guess what? We had 35 great days before it. We had almost 90% win rate for our trades before it. And I'll be honest, if we can move forward with the same win rate and avoid the once in a lifetime liquidation event, we are going to be successful. However, you know, we have some work to do now. But again, this is a long-term project. It's always been long-term for us. It feels even longer for me. But we are in the process of picking up where we left off. It's just a matter of now we have to make up a little bit more. So my goal moving forward is to keep everybody informed about what's going on with the trading, with the client funds, kind of where we're at. And then as we bring in client funds and revenue comes in, we will continue to fill up the DeFi fund back. And the plan would be the DeFi fund would go into positions that we talked about before: Bitcoin, Ethereum, CLPs, different yield farming CLPs that involve only Bitcoin, Ethereum, and probably stable coins. I believe we are done speculating on altcoins. Even if you decide to pick altcoins, maybe it's not the one institutions pick, and then that ends up losing 80% of its value. We can't have that. We don't need that type of uncertainty. So we will stick to the blue chips. We will stick to stable coins. But ultimately, we are going to continue to fight the process and go to work with clients. Like now more than ever, I've challenged the team: pull yourself up by your bootstraps and get to work. So that's what we're gonna do. Other than that, my trademark phrase. Other than that, let's get out of here. I hope that helps answer some questions. Things aren't great. Things probably aren't even good. Things feel a little dire, but we are going to get through it. The team is here working on it. We are actively in business with several clients. Now we just need to, I guess, for the most part, just get over Sunday. The sooner we let that go, then we can get back to work. And I appreciate everybody's time and patience and support. And if you're here with us for the long run, thank you. If you decide that it's time to move on and you want to take your liquidity elsewhere, I totally understand. No hard feelings. I've seen people do it already. This is DeFi. Again, I don't know how many projects over the last 2 years I've seen poof, gone. You can't sell anything. You can't liquidate your NFTs. You know, I've seen so many projects where you're just like, all right, I spent $10,000 on this NFT and now I can't sell it and the team's gone. We didn't want that. That's why we made our NFTs redeemable. That's why we want to make sure the liquidity is in place for the token, because if people decide they want to go, they can go. We always want people to be here by choice, not by hostage. So thank you all for being a part of Block Central. I appreciate it. I know Barry appreciates it, and the rest of the team does as well. But we got some work to do. It's not easy building a business that actually makes revenue, and it's not easy to do it consistently over a long period of time. Most tech startups, most fintech startups die pretty quick and flame out and end up not being anything. And we wanted to avoid that, but at the same time, it's kind of a pain in the ass. If I could go back 2 years, things would be different. We would probably just buy Bitcoin and sit and be happy, because that seems to have been the best investment decision out of literally everything else that's happened over the last 2 years.